Well, the Reserve Bank of India is likely to keep the key rates unchanged and also maintain a accommodative stance. Do note that the RBI is still likely to continue its focus on growth, while it may again highlight the key inflation risks. Focus on growth would be on account of that the recovery is still fairly fragile as well as nascent, and there is risk in terms of the COVID third wave. And we're also seeing that the price pressures have become only widespread across the core basket, along with high food inflation. Most of the economists do expect the Reserve Bank of India to keep its GDP forecast for FY22 unchanged at 9.5%. However, quite a few of them do expect the RBI to go ahead and hike the CPI inflation forecast for FY22 anywhere by 30 to 50 odd bips to as high as 5.6%. Entire commentary in terms of the growth inflation dynamics and RBI's view in terms of the impact of the COVID second wave and the risks in terms of the third wave would be fairly important, along with the fact of what does RBI think in terms of liquidity in the system and the path towards policy normalization. Some of the economists, for instance HSBC, does expect that from Q4 onwards they expect the Reserve Bank of India to start draining out the surplus liquidity, raise the reverse repo rate and change its stance to neutral. And HSBC also expects the RBI to hike repo rate by 50 bips in second half of 2022, followed by a 50 bips hike in 2023. And hence the entire commentary in terms of liquidity as well as policy normalization would be fairly important. Not just that, the external dynamics may also require the Reserve Bank of India to adopt a normalization process. For instance, what does the US Fed do in terms of hiking rates or policy normalization by the global central bank? High oil prices are another key risk that we need to monitor, and the RBI's comments also here would be important. If you look at Deutsche Bank, well, they do expect the MPC to likely revise its FY22 average CPI forecast slightly from the previous 5.1% and flag potential upside risk. HSBC expects the FY22 GDP growth to be retained at 9.5% with risk evenly balanced, and the governor is likely to reiterate the dovish stance and argue against a hasty withdrawal of monetary policy support, according to HSBC. In fact, they're also expecting that RBI may also look to maintain the dovish stance and overlook the transitory hump in inflation. So overall, yes, expect another policy wherein we may see the key rates unchanged along with an accommodative stance, but the outlook would be fairly important, both in terms of growth, inflation, COVID risk, and also the path towards policy normalization ahead.